I think white collar needs blue collar more than blue collar needs white collar. Because think about it. Like, okay, we need a doctor, but we only need them if I get hurt on my blue collar job. But that doctor can't get to work without the roads, without the electricity. He needs the plumbing. He needs the blue collar guys to create his hospital or clinic so he can actually go do his job for whoever's sick, right? Blue collar it's a wealth transfer. These doctors are taking a bunch of money, and if blue collar is really smart, they're going to charge accordingly and transfer some of that wealth and understand that you also have the same knowledge and skill level in a different area that is just as valuable.
Hello, and welcome back to the podcast. Thank you very much for being here. Today, I am going to share my interview with the Wealthy Cowboy with you. It was an absolutely fantastic interview. I'm sure you guys will all go subscribe to his stuff when we're done. But Crockett is amazing. We did it in Texas. So it was super fun to be in studio with him. So enjoy the episode and let me know what you think.
Welcome back to the Wealthy Cowboy Show. Today we've got a really cool one on building wealth and generational wealth and rethinking what you've been taught about money. Something that I kind of learned about a while back and have been on it ever since. But Mary Jo Ehrman, you might have seen her on Farming Without the Bank. She has a book out, puts a lot of content out on all the platforms and everything. Been on other podcasts, and I'm excited to get to talk to her finally. She happened to be in Texas, so it worked out.
Thanks for having me. I'm excited you reached out.
Yeah. So you're from North Dakota, right?
Yes.
So tell us your background, like where, obviously you have some kind of farm background if you came up with Farming Without the Bank, because it's the infinite banking concept is a mainstream. I wouldn't say mainstream, it's a niche, but we don't see it in agriculture. How did all this evolve, Farming Without the Bank?
So when I started with infinite banking, I was just talking to anybody that would breathe. And I'm like, oh, you need to do this because we all have money. We all should be using the concept. But people didn't get it. And then I slowly realized I can work with everybody, but I really like farmers. I grew up on a farm ranch operation. My dad had Charolais cattle for about 30 years. So we were purebred breeders. And then he farmed, 1,000 acres or something like that, about 1,200 acres. And I just knew the expenses. I knew that the banks controlled. I had already had some other farm clients. I was in the P&C business before I sold life insurance. And I always gravitated toward farmers. I did more farm insurance than I did, individual insurance. And so I just knew that was going to be it's just people needed it. But they didn't know they needed it.
Yeah.
And so I had to write the book.
Yeah.
But yeah, so that's my background. It's just where we grew up and I just love it. I just love my farmers.
Yeah.
They complain all the time, but I love them.
And like the P&C world, I never sold P&C, but I've sold life insurance. But people are mandated or whatever, they're required to have that. So it's an easier sell, I guess, where they really need some kind of life insurance. But it's a harder sell. It's like people just want to put it off and stuff, just generally, not even the infinite banking concept, but generally. Right.
Yeah. And it's always amazing to me because there's one thing certain in life and you're going to die. You're not getting out alive. And so, but we don't plan for that. We're going to plan for the fire that may never happen. We're going to plan for the car accident or hitting the deer that may never happen.
Get insurance on your phone.
Yeah, exactly. For $1,000 item, Yeah, exactly. It's just, we have, and even I thought about it a couple of years ago when we had Obamacare and everybody got, they had their tax penalty because they didn't have health insurance. But if I take care of myself, I should be okay and not need health insurance, right? We're not likely to get sick when we're younger, but we are likely to die. It's not if, it's when. Yeah. But we don't mandate that, which I always find super interesting because how did the funeral homes get paid? Right? There's a couple of things that should be mandatory. Life insurance being one of them, not necessarily health insurance. So we're more worried about how the hospital's going to get paid than how the funeral home's going to get paid.
The funeral home
they don't just bury people for free. Yeah. They don't just cremate people for free. The coffin's not free.
Yeah, funeral home needs to step up their lobbyist budget, I guess.
Right.
They could get some more bills passed.
Yeah.
So what was that transition like? Like for me, I was just coming out of not a sales background, or not really. I sold feed and hay and stuff like that. And I was always like, I'm not going to sell it unless I believe in it. So when I started in life insurance, I got policies on myself, and I was like, this is a good industry because like we just talked about, like you need it. And I was starting a family at the time, like it protects your family. Just to get buried costs quite a bit of money that most people don't have. And like, what were your thoughts going into life insurance and switching over to that?
Well, that's funny. You should ask. Because when I sold PNC, I wouldn't get life licensed. I was like, it's stupid. I don't need it. When you buy PNC insurance, when you buy your home and auto, you get a discount if you have multiple packages with that same company. So if you have home and auto with two separate companies, it's going to usually charge you more than if you have it all together. So you could basically sell somebody home, auto, life, and the discount on the home and auto would be enough that the life is paid for. And I never sold it. I would tell people about it, but then I'd tell them to go see Karen. And I'm like, Karen will just sell you the life insurance piece of it. It's just term, it's cheap, whatever, but you should have it. Like, why would you not have it? But I'm not life licensed, so you go see Karen. And I had no desire to ever get life licensed. I liked the PNC side of it. I liked the farm side of that. I could go out, see my farmers, determine what needed to be insured, what didn't need to be insured. But I didn't like the life side. And so when I was introduced to the infinite banking concept, somebody said, it was my old daycare, my daughter's daycare lady started teaching infinite banking. And she's like, oh, they need someone to manage the office. I'm like, what are they doing? She's like, oh, they sell life insurance. I said, I hate life insurance. I don't want anything to do with it. But are they going to pay me more to manage the office? Okay. And so I talked to them. It was I don't know how long I was there, probably an hour. They never said the words infinite banking. They never said the words life insurance. They were drawing crap on the screen. I'm like, what are you, Forex trading? Like, what are you doing? Because none of this makes sense to me. And so then they sent me home with Becoming Your Own Banker. And I read that book and I understood the first half of it, but I didn't understand the second half. So I understood the concept, because the concept is not the life insurance. A lot of people think that infinite banking is life insurance. No, it's not. It's the concept, right? Yeah. The utilization of money. It's the thought process around money.
You can buy the policy and not implement the concept.
Right, exactly. And so but I didn't understand the second half of the book because it's all numbers and it's all outlays and cash flows. And I was like, I don't know what any of these columns mean because I didn't know how to read an illustration. I didn't know any of the life insurance words. And so I thought, well, I love this guy, but I don't know what any of those numbers mean. But I agree with every single thing he has said in the first half of his book. And so then I went back and obviously they explained it, but I thought for sure. Then when I left, after I read the book and I went back and they explained it, I was like, well, okay, this is legit. But up until that point, I'm like, these people are going to prison, man. Like, this is an absolute scam to the fullest extent. They can't even explain what it is. And those people are just slimy salesmen. I mean, still to this day, they're just salesmen. They're not teachers of anything. And so I only lasted there 6 weeks. And I was out. I figured that out pretty quickly.
Yeah.
But it was super interesting because then I took my life insurance license. Well, then the next step was, okay, I got to read all these books to prove that this is right. So I read like 5 books in 4 weeks or something. It was crazy. I didn't put a book down. And I was just in awe. Like, how could this possibly be true? And I did not know about it because I was an avid reader of penny stocks and stock market stuff and Robert Kiyosaki and trying to figure out what are people doing with their money. I mean, I read Robert Kiyosaki when I was 23 years old. At this point, I was in my 30s. I'm like, why can't I buy rental properties? Like, what's going on? Well, because I was listening to Dave the Dipstick at the same time, And so I was like absorbing as much financial stuff as I possibly could, thinking, well, I should have seen this, but I was Yahoo. There was not even a Google at that point. And so when I heard about infinite banking, there was Nelson's book, there was Dwayne Burnell's book, Financial Independence in the 21st Century. And there was one guy that was on YouTube and had something. And he had started about the same time I did. So all of his content was like super, just a tiny amount of it. So then I'm like, well, this is still a scam. So, or could be a scam. So I go to the North Dakota Insurance Department's website and I look up whole cash value life insurance, whole life insurance. And by God, you can borrow against cash value. And I was like, whoa, okay, that's not a lie. Like that's right on the website. So, I heard about this and within, I don't know, I want to say it was probably a month. I quit my job. I had a whole whopping 10 grand. Don't recommend to do that. Put it in a policy, started my first policy, and I was like, everybody's going to love this. And guess what? They didn't.
Yeah.
But I thought they would because I saw it, But even then, I was still like, oh my gosh, like this is not good. Like nobody knows about this. And I was still just very uncomfortable about the fact that, is this a scam?
Mm-hmm.
And I was only in the industry 6 months, maybe. And one of my friends, I gave the book to them. They took it home, gave it to her mother-in-law. Her mother-in-law turned me into the insurance commissioner, said they're stealing all my kids' money. I was investigated in 6 months. And they're like, what are you doing? I'm like, I'm selling life insurance. I'm like, how is this illegal? And how could this be illegal? And so they told me all the things that people do illegally. And so I was like, oh, good to know. Not doing any of those things.
Like the money laundering
but
stuff.
If I want it to be illegal, now I know how, And so when they were like, no, you're good. Like you're not doing anything illegal. Their biggest concern, especially in North Dakota, because we're such an elderly community, what happens is per capita, this is what I learned. Per capita, we have more insurance fraud than any other state. And it's because insurance agents will come in, tell an old person, hey, let me take that annuity and transfer it into a whole life policy. But you don't get access to all your money. You have less death benefit, but the insurance agent made a bunch of commission.
Yeah.
So I was like, oh, that's interesting. So then I was like, well, I'm cleared. Like, we're good. This is totally legal. I passed with flying colors.
Yeah.
So,
yeah, I think for me, I got into life insurance not knowing anything about it and started selling like final expense to old people and then like learned about term and sold some term. And I was like, I know this. I don't know why that I always just kind of lean more towards the whole life. Like I knew I was like, there's some way you can like benefit from whole life insurance. I didn't really know why. And my mentors and like the people I was under, they didn't know. They probably didn't know either. They were just pushing a product to sell. And I just kept studying on my own and stumbled upon those books and some of those same books and videos and everything. And I was like, I think this is what I've been looking for. And that is a hard sell once you get into that because it's not, you need some death benefit. You need to protect your family. It's not that sell anymore. It's like you got to completely change somebody's way of thinking about money and how they use it. Cause it's mainly just get enough to pay your bills and keep good credit. This is the middle class. Get enough money to pay your bills, keep good credit so you can go buy stuff. Yep. It's not like nobody's building any wealth. Nobody's getting ahead. Poor people, just can't even pay their bills.
Right.
And this is one of the reasons because they think about money differently.
Well, they don't think about money.
Mm-hmm.
The only person I heard this on, I don't remember if it was a podcast or what. And they said the only person that thinks more about money is the only person that thinks more about money than rich people are people without money.
Yeah.
And think about it. Like if I don't have any money, I'm more worried about money than I am anything else.
Mm-hmm.
But as a society, I always say we talk more about our sex life with a stranger than we will about our finances. It's absolutely backwards. I don't understand.
Mm-hmm.
Like people will talk about stuff with complete strangers that I'm like, that is TBI, man.
Yeah.
Why are you talking? That is way too much information. But we are not going to talk to strangers about our finances. And we're terrified instead of, I always say this, jealousy kills curiosity. And we are so jealous of rich people or wealthy people that we don't ask them how they got there.
Yeah.
And what people don't understand is wealthy people love to share that information. If you come to me and say, hey, Mary Jo, how did you do that? I'm going to tell you only if you genuinely are going to take that information and do something with it. People also don't understand that wealthy people guard their energy and their time. And so I'm not helping you if you're a dead end.
Mm-hmm.
If you are not going to take that information and go do something with it, whatever. We just had somebody stay at our Airbnb, super wealthy guy. We ended up being able to go over there and we chatted with him and sat down and had a really nice visit. He told me what he's doing with his money. And I was like, hey, how do I avoid tax? Like, I need help. And I cannot find the answer to what I'm looking for. And so he's like, well, this is where I put my money here. And before, though, he would even tell me that, he was like, well, unless you make 7 figures, it's not going to help. And I said, well, I make 7 figures.
Mm-hmm.
Instant attitude change. All the information I needed came out because he knew, right, that I was genuinely looking and interested and successful, and I will do what needs to be done. He told me the book to get. I got the book. I read it. And I'm like, I don't need to talk to him anymore, right? But he didn't tell me, and I shouldn't say it that way. He didn't tell me what book to read. He told his wife to tell me what book to read, even though him and I were texting at one point during his stay about the dishwasher or whatever was going on over there, or microwave. And so he had my number. But that is his way of guarding his energy to somebody that he doesn't know. Is she really going to take that information and implement it?
Yeah.
So wealthy people are not snobs. Wealthy people are happy to help. They're just going to guard their energy to people that just are lip service. Oh, I want that information, but I'm not going to do anything with it. Well, then stay where you're at and go talk about what's going on in the NFL and the college games and, whatever.
Yeah. I think anybody that has ever had somebody come ask for help for whatever, there's always going to be somebody one level below you and whatever that, just like you said, if somebody comes up to you and like asks for help or mentorship or, however it comes and you tell them something, at first you're like, heck yeah. And give out everything you can because you're enthusiastic about it. And then they do nothing with the information. And it's just like you said, it's a waste of energy. It's a waste of time. And then the next time, the first person ruined it for the second person or the third, whenever it happens, there's going to be at some point where you're like, this isn't worth my time. And you're like, I'm not going to reply to that person. Right. I'm not going to talk to them.
Right.
And unless you can bring value to them or show that you're actually going to do it.
People get mad because I make them read the book before I talk to them. Anybody can have a free hour-and-a-half call with me.
Mm-hmm.
I am happy to do that. But you're going to have to read the book first. I don't care if you get it from a friend. I don't care if you go to the library. I don't care if you buy it. I am not here making money off of books. But you need to put the time and energy into looking into that information so we can have an intelligent conversation. Because I am not here to sell you something for an hour and a half. I am here to help save the farm. I am here to have this place here for generations. And if you don't want to put the same time and energy into that, then go find another agent to work with because it's not me. Yeah. I'm not going to do that. And every agent that I teach that to, I'm like, we just got out of coaching academy for the Nelson Nash Institute. I'm like, you don't give the book away for free. You don't refund the book and you don't meet with people that don't read the book. So if you're reading, and the best clients will read my book and Becoming Your Own Banker. And then we have a very strong meeting because we know exactly where we're going to be, or you're going to listen to all 300 podcasts of mine or whatever it is that you're going to do. You're going to do your due diligence and we're going to have a great conversation. But if you can't spend $20 and you can't read a book,
you're going to have to put some skin in the game.
Why should I give you my time?
Yeah, you're going to have to put some skin in the game, a little of your time and a little bit of money.
Yeah.
And for one, it's going to give you information. You're going to learn. Any nonfiction book, basically you're going to learn something.
Right.
So it's not going to be a waste of time. But if you would kind of explain what's in those books and what the infinite banking concept is. And I think it's not only did I kind of knew, I was searching for something and I finally found it. But then I gave the book to my dad, Become Your Own Banker, and gave it to Dad. And he's like, this is crazy. He's like, we could be, millionaires if you set that up for 4 generations or 3 generations and it just keeps going, it can completely change your family history.
Mm-hmm.
And you don't see it, like you said, I don't know what the deal is. Like, nobody wants to, it makes sense to me to go find somebody successful that you want to be like, and then just go copy everything that you can that they did. We want to say like, oh, they're wealthy, they're rich people, whatever. We don't do the same things as them. That's why you're poor, obviously. But the wealthy families do use some form of this concept, some form of life insurance. So if you would just kind of explain, just go through the infinite banking concept.
Yeah. So the infinite banking concept is I say it's a thought process and a utilization of money. And so when you break apart becoming your own banker, it is, Nelson says it's a 10-hour course in dividend paying whole life. So when we talk about whole life, we're not just talking about universal life variable index because those are all crap. We're talking about dividend paying whole life. But it's a 10-hour course, and it's a course in understanding how banks work. How do banks make money? Fractional reserve banking. Who's in control of your 401k? The government. They're the ones that get to decide you have a 10% penalty if you take it out before 59.5. Now they just recently moved it to, I believe it's 72 for required minimum distributions, that you have to take that money. So between 59.5 and 72, you better be taking your money. If you don't, they're going to make you take your money and give you a 50% tax penalty. And so and then it's all about human factors. Parkinson's law, a luxury once enjoyed becomes a necessity. Parkinson's law also talks about the fact that our income or our needs rise to meet our income. He talks about the Willie Sutton law. Why is Willie Sutton stealing gold from banks? Because that's where the gold resides. That's where all the money is, right? Like all of these things that that make up our belief system. Once we understand the problem, because in the infinite banking, Nelson is saying, hey, here's the problem. We've been taught by the government system how to think and how to use money from kindergarten on. This is what we do. We punch a clock, we go, we get a job, we pay our taxes, and we save our money in a 401k. So let's find the problem. Now let's take the problem and move it to a system where we can move our money so that we have liquidity control and guarantees, and we can use it to build a business, buy a ranch, buy a farm, leave inheritance, pennies on the dollar of death benefit to the next generation. So a lot of people within infinite banking, I don't know anybody else in infinite banking, honestly, that does what I do as far as like, I'm not an estate planner, but I am looking out 20, 30, 40, 50 years. I'm 2, 3, 4 generations down the road of saying, hey, what are we going to do when you pass this on? Because we need to have generational wealth. And so most people are, working or they have a small business and they don't think about what am I going to do at transition? And somebody may not take over that plumbing business or that electrical business. And so most agents don't talk about that. But in farming, it is a generational thing. And so all of that just kind of fits in to infinite banking. Nelson talked about it. But most people that punch a clock will say, well, I just have a house. Like, what's the big deal? I don't need to leave my kids rich. It's no biggie, And so infinite banking encompasses all of that. The thought process, the human factors, the government control, the non-liquidity of money, no cash flow, right? We're not taught about cash flow. And then the life insurance is the tool that helps us do all of that.
Mm-hmm. Yeah, it's crazy to like how people look at things, like we talked about earlier. You have to completely change your mindset around it because you hear from Dave Ramsey, buy term, and then you show people the difference and get $1 million in term for $100 a month or $100,000 in whole life for $100 a month. They're like, oh, well, the term's way cheaper. It's like, yeah, but less than 2% of that pays out.
Mm-hmm.
And this is guaranteed to pay out.
And it's not actually cheaper. Have you ever ran the numbers? So in Farming Without the Bank, I outline that. It is out of pocket cheaper to buy term than whole life. But per dollar of death benefit up until 85, it is actually more expensive to buy term than whole life. So how are you looking at it? Out of pocket or per dollar of death benefit? Because nobody is teaching us. Most agents do not talk about what your cost per dollar of death benefit is. If I can spend 20 cents on the dollar, that's better than spending 25 cents on the dollar, right? And so where can I get my cheapest dollar over my lifetime, not over a term of 10, 15, 20 years when I only have a 2% chance of dying?
Yeah.
That's why it's cheap. And people will say, well, whole life companies, these life insurance companies make so much money off a whole life. Do they? Or do they make off a term?
Because they never have to pay it out.
Exactly. Yep.
I mean, if you look at the short term, you're just like, oh yeah, that's a better deal because it's cheaper out of your pocket, like you said. But yeah, it's not cheaper. You're not getting the value like you do out of a whole life.
Right.
And then the things that you can do with the whole life also with the infinite banking concept, the cash value, if you put it in the right policy, your cash value and your death benefit grow, and things you can do with dividends and all those things.
Mm-hmm. Yeah. If your whole life policy is structured correctly, you have an infinite banking practitioner that's helping you, you're putting 50+% of your premium is going to the cash value, to the paid up additions piece of that policy. We're turning around and borrowing that money in 10 days.
Mm-hmm.
And so when I set up a policy for most of my people, 75% of that money is going directly into the paid up additions rider. I immediately have cash value. We're using it to buy cows, buy land, buy equipment, feed, seed, fertilizer. I don't care what it is. We're using it because we're either going to use cash or we're going to use that. Mm-hmm. And, again, when you look at the concept, one of the problems is we finance everything we buy. And people don't understand that. They're like, no, I pay cash. And I just had this argument with a discussion with my brother. And I'm like, you're using cash to operate. You lost opportunity on that cash. So you lost the ability to make interest, which means you basically paid interest. So you're either paying interest to the banks or you're losing the ability to make interest. You're financing every single thing you buy. And so when we start to understand how money works, then we can understand the problem, and the whole life becomes the solution. And it's very easy. It's a response just like your dad. He understood the problem by reading the first portion of Nelson's book, and then Nelson gives him the solution, and it's a no-brainer. Why aren't we doing that?
Mm-hmm.
Right? But people want to go right to the numbers and they want to go right to the life insurance, that's fantastic. But I can sell you life insurance, but if you don't know the problem, you're not paying your premium, or you're not putting enough money in as premium. You don't have enough life insurance policies. And so why did Nelson have 49 policies? Because he knew what the problem was, and this was the solution.
Yeah, and I don't know why I've always I just like to go challenge stuff, I guess. But like Dad and the older generation, and it gets passed down. I don't know when it started, probably from the scarcity of the Depression and stuff. But, it's like the security is in, let's pay off everything. Let's pay off the land, the house, have no bills, but you still have bills to live, right? And I was just always of the mindset of no, we need, and after I read Rich Dad, Poor Dad, Robert Kiyosaki, I understood. I was like, cash flow. We need cash flow. I was like, I don't care about anything else but cash flow. Mm-hmm. If nothing else, you could pay your mortgage and your payments with your cash flow.
Right.
And then that's what I try to explain too, is and I just had this conversation the other day with my in-laws, and it's not, I don't think it's cut and dry of whether you should pay something off or not pay something off. It's a matter of interest. If you have a 2% interest rate on it and you can go put your money somewhere and it makes 10%, then you might as well keep this loan and go make the 10. You're going to have an 8% spread instead of just being we need to pay it off, or we need to borrow from the bank on everything. But one thing is for sure, is that the bank gets paid on everything. And if you can become the bank, then you're guaranteed to get paid.
I always tell people the bum on the street's debt free, but he's begging for cash flow. He can't buy cigarettes, he can't buy booze, and he can't buy food without cash flow. And you're his cash flow system. And Dave says, pay everything off, right? You should be debt free. What's Dave doing? Just stop listening to Dave and start watching Dave. What is Dave doing? He has a business that he sells you books and he sells you programs and he sells you wallets with dividers in them, so you know which money goes to which, right? And he's creating cash flow from selling you stuff. Then he takes that cash flow and he buys rental properties to create more cash flow. Why isn't Dave teaching exactly what Robert Kiyosaki's teaching? He's just teaching you how to be not broke, right? But he's not teaching you cash flow. And so I may want to pay off a 2% loan rate because it makes me feel good. What are we wanting to do in life? If you don't want to expand and you don't want to have businesses and you don't want to have rental properties and you don't want to have farms and ranches and cattle and you don't want to do any of that stuff, then pay off your 2% loan, right? Silly as all get out. I don't agree with it either, because you now put all this equity in your home. If you lose your job and you want to go to the bank to borrow the equity out of your home, they will not give you the loan because you cannot pay it back. And so now you have to sell your home and move in order to get the money out of it. Don't tell me that's not true. People will be like, oh, no, that's not how the banks work. That is exactly how the banks worked in 09 and 10. They will pull your HELOC if you're not using your HELOC. And so we want to pay that off so we feel good. And that's great. You went to bed that night and you slept really, really good. But how are you going to retire? If we talk about retirement, which I don't believe in, Nelson doesn't believe in, like where Nelson always says, where you show me in the Bible where it talks about retirement. That is a man-made scheme to get people out of the work environment. Everybody I know that is healthy and living a very long life, they didn't sit on their butt from 65 on. They were working. My grandpa lived until he was 98 years old, and he fixed fences until he was older. He was about 85 before he quit. You don't. People that quit moving, retirement means take out of service, right? And so if we want retirement though, and we want to have this, how are we going to pay for retirement? We need cash flow. We have inflation. With inflation, we need cash flow to subsidize that. Not Social Security, not a life insurance policy. Like, this always kills me. When people are like, oh, well, I'm going to buy a life insurance policy and then I'm going to use that cash flow for retirement. Okay, but you're putting peanuts in. If you don't get to put $3,000 a year into a life insurance policy like you do your 401k. Your 401k is not going to be enough for retirement. Millennials, a 30-year-old, let me think of the numbers. I think I ran the numbers on a 30-year-old. A 30-year-old today, if they're making $100,000 a year today and they retire at 65, they are going to need $30 million of tomorrow's dollars with a 4% inflation rate. We have more than a 4% inflation rate, right? But if that just averages at 4, who is going to have $30 million? I'm 50. If I take my age group, Gen X, and they think, oh, I got $500,000. I have $1 million. I'm good. No, you're not. You're going to need $3 million at 65 with a 4% inflation rate to get you to 85 when you are likely to die. Like financial advisors are not talking about this. What we need to do is create cash flow. When I see a Gen Xer and they think they're doing really, really well with their $300,000 to $500,000, I'm like, how are you going to retire? You have 10 years. If you just continue to do what you're doing and you're making more than $100,000 a year, because most Gen Xers are at this point, How are you going to live? Oh, we're going to live on less. How? Because groceries aren't going down. Electricity's not going down. The water bill's not going down. Specials aren't going down. How are you going to live on less? My parents.
Why would you want to?
Exactly. I don't want to. But guess what happens when your children were born? Your parents, grandparents spend more money on this child than you ever saw spent on you in your lifetime.
Yeah.
Right? So do you want to be the grandparent that's like, oh, we just can't do we can't even come see you because we can't afford gas.
Mm-hmm.
Right?
Not in the budget.
Right. So when I talk to these people, I'm like, okay, so how are you going to create cash flow? And sometimes they just look at me like I have 3 eyes. And I'm like, you need cash flow. We need to take this money and not pay off these bills and these loans. We need to take this money and we need to look at, are we going to buy rental property? Are we going to buy farm ground? Are we going to start that little hobby farm? What are we going to do that's going to create cash flow? And I was listening to one of your podcasts. I don't remember which one it was, but you were talking, I believe it was you, that you were talking about this. Like, the boomers have so much between their ears. There's so much knowledge up there, and they don't see the value to sell that. Go find yourself a Gen Xer or a millennial that can do some YouTubing for you and just dump all of that on YouTube and monetize that so you have some cash flow to supplement retirement. But we just don't think about that, right?
You got to get creative.
Yes. But we are losing so much knowledge in the boomer area. And even Gen X, they're like, well, I don't know what to do. I don't know how to create cash flow, Mary Jo. I don't know how to do that. There's these things called podcasts and YouTube, and you can do anything to create some cash flow. But that 401k and that IRA is not going to do it. So you're going to pay all this debt off so you feel good because you don't have a house payment, but you still have groceries, gas, taxes. You still have all that stuff.
Mm-hmm.
That's going to eat up a ton of money.
It reminds me of getting creative. It reminds me of, I don't remember the exact story, but you might know of a story in the Bible about this widow that had lost seemingly everything, and she just thought she was done. She didn't know how she was going to live, and blah, blah, blah.
Myron Golden talked about it.
I think so. And
that's the only time I've heard it.
And I've heard it a couple of times. He talks about a lot of that. But God or whoever spoke to her and told her to go, says, you don't have nothing, take account to what you have. And she had a bunch of oil or something. And so he was like, go around and get vessels or cups, whatever they were called then, and fill them with this oil and go sell them. So she goes around to her neighbors, her friends and family, and gets these vessels and cups and all this stuff to fill up with oil. And then she goes back and sells them to those people and accumulates a bunch of money. And he's like, look, there it was. There was a way out. You thought you had nothing, but you really did. And that's the case with a lot of people, like especially a lot of the older people. These people have built businesses. They've seen so much stuff, built and been broke and then built again and changed industries and seen so much stuff just because they don't, or say they don't know technology, even though everybody uses a smartphone now.
Minus my dad. He's not allowed.
Yeah. And I was just thinking the other day watching Yellowstone, Rip still has a flip phone. I'm like, where do you even get a good flip phone at? But there's so much stuff you can, and even if you can't monetize it, I think and that's what I have people on they come on the show and they're like, I don't want to. And I'm like, I think it's your duty to pass your knowledge on. I listen to Founders podcast a lot, and he talks about that. It was like, there's several of those big guys. I think Sam Walton was one, and some more of those big guys. They didn't write their books until they were like 80 years old. And they were finally just like, I've got to write a book to pass this knowledge on. Mm-hmm. And yeah, what you might've been talking about was like getting up to the levels of value. You can go up to the levels. You have implementation where you're using your muscles to move stuff and, make money. And then you go up to, it's the Myron Golden thing. Then you go up to, unification, where you manage the people that do the work. Then you go up to communication and imagination. That's where you can really make a whole lot of money because you're using your mouth, you're using your brain, you're using your ideas to make money, and any education. And if you go get the right education, it's super valuable.
Boomers and Gen X were taught to work really, really hard. And so we tend to work our butt off. And millennials and Gen Z are taught to work smarter. But then boomers and Gen X are like, well, they're lazy.
Yeah.
But we're the ones that told them that. Like, they didn't just come up with that, And so but there's something to take away from it. Like, I love millennials and Gen Z. They're my favorite age groups because they question everything. They think differently. They make me think. Like, my daughter came home she had worked at Verizon for 3 months. And she's like, Mom, I am not meant to work 8 to 5. And I'm like, what? And she's like, this is just, I only get 4 hours a night to myself. And I told my husband, like, where was she raised? That is not how we operate in this house. Like, we work our tail off, right? And I'm like, what in the world? And so I laughed at her, obviously, and not in her face, but I laughed at her and I was like, what the hell? So then it just kept like mulling around in my brain. I'm like, is she wrong? She's not wrong. Where did we believe that 4 hours with our family is okay, but 8 hours with somebody else? Or 4 hours with our family is okay, but 8 hours with somebody else is also okay. Why have we not questioned that? Like, why have I never questioned that in 50 years of my life?
Yeah.
And so I'm like, okay, you might need to work 8 hours, but like, you do have to work, right? But is she wrong in how she wants to do it? And how information gets transferred today is very different than how information got transferred before. Before, you had to punch the clock, you had to sit there and learn from somebody. Now you can go to YouTube, you can go to TikTok, you can go to all these places and get all of this information, and you can learn, and you don't have to be physically using those muscles all day. Do those people make money? Yes, but those people are also getting smarter. Your blue collar workers of Gen X or of millennials and Gen Z are like, you know what? You're going to pay me.
Mm-hmm.
If I have to use my muscles, I'm going to charge you for it.
Yeah.
Because this is hard work and you're just sitting there on the couch. Clearly you have the money. It's become a transfer. I always think about it and I'm like, do blue collar people need white collar people more than white collar need blue collar? And I think white collar needs blue collar more than blue collar needs white collar. Because think about it. Like, okay, we need a doctor, but we only need them if I get hurt on my blue collar job.
Mm-hmm.
But that doctor can't get to work without the roads, without the electricity. He needs the plumbing. He needs the blue collar guys to create his hospital or clinic so he can actually go do his job for whoever's sick, right? And so I'm like, blue collar it's a wealth transfer. These doctors are taking a bunch of money, and if blue collar is really smart, they're going to charge accordingly and transfer some of that wealth and understand that you also have the same knowledge and skill level in a different area that is just as valuable.
Mm-hmm.
And so that, like, all the way around, the younger people need to understand their value a little bit, and they are. The older people are still cheap and they can't quite get past all of that. But there's so much knowledge there that they always just gave it away for free. Now we have to tell them that they should charge for it. And they're like, but we never have before. You don't do that to people. Yeah, you do.
Or they don't want to give it away at all.
Right. Yeah, there's that too. But they also have self-worth issues where they don't think that their knowledge is that great. They're like, well, it's just something I do every day. Yeah, but how many people don't know how to change a tire? How many people don't know how to put trim around a window, or hang a door? Or that is all knowledge that's out there that people don't have. Why do you think regenerative agriculture, why do you think that has this huge movement right now because you have people like the Gabe Browns of the world that have 20 years of knowledge and they're sharing that knowledge. They're teaching you. I'm not doing anything different. I have all the knowledge of infinite banking and life insurance, and I'm just sharing that knowledge. I just get paid differently. I don't have to charge you per hour.
Mm-hmm. What are like some examples of how you've taught somebody to implement this on a farm or a ranch in their operation? Because I know I've read a bunch about it and the concept in the books and stuff, but like, what are some? I know you're in the trenches and you're dealing with farmers and ranchers. So like, what are some? Do you have any like? Can you use any examples of things that's happened like in real life?
Yeah, I mean, everybody's operation is a little bit different, obviously, but are we using it are we setting something up so that we can pay for operating expenses and move those away from the bank? Are we using it to buy cattle? Are we setting it up? So like, let's just say that someone comes in and they're like, hey, I've got this extra cash. What do I do with it? Or I'll meet with somebody. This is probably a better example. I'll meet with somebody and I see that, gee, we have, $3 million worth of operating, but we only borrow $1 million. So you have $2 million of cash you're using. Can we use that so that we can start your own banking system? And then you can borrow from that and you can use it for operating. You can use it to buy cattle. You can use it to buy equipment, whatever. If you have a bad year, and like this year, commodity prices are down, yields are low in a lot of places because we just haven't had the rain across the country as a whole. Iowa's probably been luckier than anybody. If anybody else had rain, it was in the form of a hurricane. And so if you have low prices and you don't have the yields now, the bank's going to be knocking at the door. Where here, you can just not pay that cash value loan back. You can pay the interest only on that. You can wait to sell grain because prices are down. Now we can hold grain and we can wait to sell grain. So, I have a million of those kinds of stories because it's kind of what we do. The big picture of that is when I sit down with somebody, it's a matter of, Crockett, are you taking over mom and dad's operation? Are you going to have to buy out a sibling? What's going to happen? What is the estate plan? And so if there's no estate plan, then we need to create plan B, which is, do you buy a life insurance policy on mom or dad? So when they die, you have the money to buy out a sibling, or you have the money to take over operating. Because some people are like, oh, we have this estate plan and it's absolutely perfect and I don't have to buy anything. But when dad dies, mom gets the money to live and you don't have any operating money. So you're going to the bank when dad was operating on $2 million of cash. You're going to the bank because mom's that $2 million is going to take mom from now until death, right? Or vice versa, whoever dies first.
Mm-hmm.
And so it's a matter of looking at all of that and saying, how are we going to save this operation so we don't have to buy it with every single transfer? Because parents are doing this equal and fair crap. And I don't like any of it. You've heard my podcast, right? I think it's all about deserving. Do these other kids deserve it? Just because I'm born there doesn't mean I deserve it. And I'm the off the farm kid. So I have the voice to be able to say, I don't deserve anything. I'm not there with my parents every single day. So my brother's there. He's there helping them. My dad has a knee replacement coming up. Guess who's going to be there helping mom get him in and out of the house, doing all the work, doing all the snow removal for him because he's not going to be able to do any of that stuff. I don't have to put up with him every day. Like we get a little irritated with our parents at times. And the off the farm kids that are away don't understand that we have to put up with them every single day on the farm, right? And so all of that comes into play. Who's the one that's going to take care of them as they get older? How much did that cost giving up that time to do that? Just the progression of farming. You've got these younger kids that are saying, hey, dad, you might need to get a tractor with some GPS, and my dad has no idea how to run the combine. He drives truck. He has become the trucker and the golfer, and he will go get parts and he will do all the things because like I said, we don't allow him to have a smartphone, right? Because he's going to probably lose it in a grain bin. It's going to end up at the bottom somewhere through the auger. And so it's just not a good idea for him. And so it is not like without him, without my brother, where would my parents' operation be? Not where it's at. I can tell you that. It had probably been rented out a long time ago or sold because dad's not going to do it. He's not going to learn about all of the stuff that needs to be done. And so when I'm looking at how are we helping with generations? Now, I have a lot of people that are starting from scratch, a lot of clients that just, have off the farm jobs and then they buy a couple 100 acres. Or I've got one guy that he's farming like 3,000 acres and his parents never farmed a day in their life. His grandparents never farmed. He just did it all himself. And so what are our ultimate goals there? How can we take some of that off the farm income, run it through some life insurance premium, and start to buy cattle, start to buy equipment, land down payments, whatever that looks like through that policy, and give you and start building some of that wealth and uninterrupted compound interest in the policy, along with the death benefit, obviously.
Yeah, I think that's a huge deal. I mean, it's a controversial topic that we talk about, it comes up, especially down here. I don't know how it is up there, but like a lot of this country's getting cut up because city people are wanting to come to the country since COVID and have a little bit of their own land. Also, that it drives the value up. And so when people are inheriting ranches and stuff or places, not even ranches, but smaller places, and they're selling them because it's a huge chunk of money. And like you said, those kids may not have, they moved off and they're not ranching because especially like if you have 200 or 300 acres, like you're not making a living off of it anyway. And everybody's like, don't sell the family farm, blah, blah, blah. And I'm not saying to or not to. I'm just saying, has anybody ever thought about it? Like nobody thinks about it. You're either one way or the other. And it's like, no, they're selling it because this is a huge life-changing chunk of money that can be brought into the family. But it could also be, if the parents set it up, that could be a 200 or 300 acre recreational place where the family comes back for holidays or whatever, because you left enough money there to keep it operational and give money to the kids or whatever through life insurance, through planning, through estate planning, things like this. And like you said, nobody wants to talk about, money or politics, and look where we've got with both of those.
Exactly.
So,
and land's getting cut up everywhere. It doesn't, I have clients all over. I have clients in 48 states, and it is everywhere. Everybody is running into the exact same thing. You have urban sprawl and people get mad. They're like, oh, well, we shouldn't be selling this. Where do we put millennials? Right? We are short, I believe it's 50 million homes for millennials. Where do they go? Up? Like, if you don't go this way, you can only go up. And not everybody wants to live in a skyscraper.
Yeah.
And so, and we had millennials that didn't want to own homes. They are now growing up and saying, oh, maybe I do want to not travel from house to house all the time. And we're seeing that change a lot as well, I think, in the last couple of years. But we don't want the urban sprawl. It's kind of like China buying farm ground. Don't sell it then. Right? So if you don't want China to buy ground, don't sell to China. Do your homework. And people are going to say, oh, Mary Jo, that sounds so easy. It is that easy. I have a client that big battery factory came in and they said, hey, we want to buy this ground from you. He did his due diligence, found out it was a Chinese company and said, I'm not selling. It is that easy. If we don't want the big guy to keep getting bigger, stop selling to the big guy.
Yeah.
If you own the land, you have the right to sell to whoever you want.
And most of the time, if you're broke, you're going to sell to the highest bidder, which is going to be the most rich person, which could be a corporation or somebody from town or somebody from another country.
But think about this. There's another one. I'm not yelling at you. It's just German passion, okay? So here's another one. If all your land is paid for and you're like, oh, I have nothing for retirement, I need to sell to the highest bidder, or I inherited it and I want the most out of my land. Why not owner finance the little guy, charge him 5% interest over 30 years, you double your money.
Mhm.
Guess what? That whoever you sell to is most likely going to go to the bank and pay the bank 5 to 7% interest. Somebody made the interest money. Why not you? So if you sell land for $1 million and you can make $1 million of interest, why are you not actually why aren't you going to an attorney, giving him a few $1,000s to drop a contract for deed? You're so scared you're going to get screwed that you won't take the chance. Well, then don't complain that the bank is charging you interest because they're taking the chance. Okay? So can we stop selling to the big guy if we owner finance? Yes. It's a guaranteed pension to these guys that they would never have otherwise. And if they default, they just get their land back. Like, how bad can you ruin land? You can, but like, do you know who you're selling to? Like, you probably should do some due diligence there too, because now you've become the banker and you're going to start asking all the stupid questions that the banks ask.
Yeah.
Right? Like, if you look at the big picture of it, like, and if we have a farmer that the kids aren't going to farm, okay, so the kids are like, you know what? We just want our lake home. So we're going to sell it the second you die anyway. And mom and dad are so worried about paying estate tax or capital gains. So why don't you sell it for a discounted rate per acre and just charge a higher interest rate? So instead of charging me a 5% rate, charge me a 10% rate, owner finance me and charge me less per acre. So your capital gains is less and I am paying your capital gains through my high interest. But nobody gets to pay the note off early in that scenario, because if the kids call the note, the guy buying the land actually got a better deal than the kids did. But now they can just continue to pay the estate. And you could have it written in the contract. Can they call the note? Can they not call the note? If they call the note, how much time do they have to give me ahead of time? I mean, there's a million ways to skin that cat. We just go, okay, we can't sell, but mom and dad are struggling. They don't want to sell it, knowing full well those kids are going to go buy their lake home the second mom and dad die. It's gone. What are you saving it for? To avoid taxes? Like, I had a couple from Colorado, and his kids don't even come home for Christmas. They hate the town that much. So he's like, they will not want it. They want nothing to do with it. They're never going to want anything to do with it. And I said, well, why don't you just sell it? And he's like, well, can I? I said, you can do whatever you want. It's your land. If all they're going to do is sell it, why don't you just sell it to the young guy that you were just talking about, that you really like? He helps you out. You guys share equipment. Why don't you just owner finance him? I said, if you owner financed him, and I, have all these calculators. So I'm like, if you owner financed him at X amount over 30 years, I think his payment was going to be like $105,000 a year or something. And I already knew his numbers.
Yeah.
And I said, you're not even making that now. Have you ever made that as a net income every single year? He's like, no. I said, you'll make more money now than you've ever made farming. And it's a guaranteed pension for you. Your wife just said she wants to go on a cruise. You guys go on the cruise and you enjoy yourself. Nobody said you have to farm it and keep farming it and keep it for your kids.
Mm-hmm. Well, I mean, it's just a conversation that needs to be planned and thought out, and instead of just thinking black and white.
Mm-hmm. But nobody talks about it. Estate planners, I don't. They're not my favorite people, because they have a cookie cutter estate plan, and everybody fits into that cookie cutter approach, and you're good to go. I have a friend that does estate planning, and she's awesome. And she's very like, hey, what do you need? She operates a lot like I do. She just sent me a note this week, an estate attorney that she knows died without life insurance. Zero plan. According to his wife, they have $0. None. No 401k, no IRA. And he was an estate attorney.
So he'd seen it all.
Yeah.
What's the best financial advice you ever got?
Start a life insurance policy. I don't know that I've gotten the best at this point. Like it's been interesting. You know, you start out life and you don't have any money. And as I was telling you before we got started, you know, I couldn't even afford a coffee. And so when I got to the point where I could afford a McDonald's coffee and a fancy coffee, I was like, ooh, I can afford a $3.80 coffee. This is fantastic. And now I'm to the point where I'm like, whoa, how do I avoid taxes? And it's interesting as your income rises, just the different people you need to talk to and the higher level people that you get to. But had I had this information when I was here, it wouldn't have mattered because I didn't have anything to implement it with.
No relevance.
Right. It's like teaching kids, you know, I used to teach junior achievement, or I did a couple of years, and then they kicked me out of junior achievement. Are you familiar with that at all? So junior achievement is this program that business owners can go in and teach in these high schools. And so I taught finance through junior achievement, but all they talked about was your traditional finance stuff. And then I added life insurance to the poster. And I don't think that went over very well. So they never asked me back. But it was interesting when I went into school because these kids are learning finance as juniors, sophomores and juniors, but they don't have a job. They don't have anything. And so what are they doing? Like they're learning how to balance a checkbook, but they're not making any money. We're not teaching them anything that's relevant. If we teach them how to run a business as a junior, but they don't have a business to run, what good is that? And so if I would have been learning all that stuff down here and now I'm up here, it wouldn't have mattered. Yeah. Everything I've learned is from millionaire business owners. I haven't along the way and just all the people that I've met.
Yeah. What would your advice be on that same topic? What would your advice be for someone wanting to build wealth?
Cash flow. What are you going to do for cash flow? And you don't do 10,000 things, right? How are you going to focus on one thing and do it well? You can't if you've got 10 different businesses. You do one and then you add to them as they grow. Like, yes, you can do multiple things, but even in my business, I find because I don't have like this huge agency of people behind me, it's myself. And then if you don't want to wait 3 months to meet with me, you can meet with my agent, John, that works with me. That's it. That's what you get. I have a couple other agents I'm training right now, but they're not ready to do anything. They're not making me any money, right? And so it's just me. So when I started my Airbnb, I noticed that my without the bank income just stayed level, right? I was growing, started an Airbnb, went level, bought a rental property, stayed level. Because I wasn't focused on growing this business and doing this, everything else stayed level. So if you want to create wealth, pick your thing and do it well and be the expert in it.
Yeah, I mentioned that the other day of you were told, you know, millionaires have 7 different income streams, but they don't finish it but they started with one, built it up really high, and then they diversified.
Exactly.
Or they built, you know, vertically integrated into different income streams within that line of business, their line of knowledge.
I actually looked the other day, I don't mean to interrupt you, but I looked a couple of weeks ago at Bill Gates and his farm ground stuff. And it came up that, you know, there's a big controversy that he bought land in North Dakota because private investors cannot buy land. A corporation cannot own land in North Dakota. So we don't have corporate farming. And so how did he get around that? And I was reading this big article on him. He didn't know he bought land in North Dakota, apparently. His investor bought land in North Dakota. And so on that same topic, if they have 7 streams of income, when you get to a point where you have people doing that for you, do you know they're not managing all 7 of those either? They started with one, but they're probably not involved in all 7 of them. They have people running those.
Build a machine.
Right. And so that person, that is I have a manager, I have whoever in charge, and that person is running that piece so that If I was just listening to your podcast before I got here with your barbecue guy. So he owns his restaurants, but then he's got a ranch. Well, most likely he's got a ranch manager that runs the ranch.
Mm-hmm.
He's not running both places, right? You put the right people in place so that you can have those 7 streams of income. But we all try to do it all of ourselves.
Yeah. To build off of that, what are 3 truths about money that we're not told or maybe we're lied to about?
Gosh, that one I should have prepared for.
Or one main one, whatever you got.
Money has to flow. Money's like water. It has to flow. It does not stay stagnant. The banks do not take our money and put it in the savings account. When we deposit money, when I deposit money, they lend that money to you and they charge you an interest rate. And that is the biggest thing that one of the biggest things Nelson talks about in the Becoming Your Own Banker book is money has to flow. And it has to go through somebody's hands to end right back up in the same hands, right? If we're starting a war, all that money is going through the central banking system and it just goes right back into their hands. It doesn't matter what it is, all of money has to flow. And we don't understand that. So we take it, we put it in a savings account, we leave it stagnant, we pay off all that stuff, pay off our house, and that's stagnant money. That money is not working for us.
Yeah, make your money work for you.
Mm-hmm.
Yeah, that's something that, for sure. You're mainly taught, get a job, save, retire, not make your money work for you, invest.
Well, you're taught that, but you're not, people are like, how?
Yeah.
Right? Because that's what I have read. Robert Kiyosaki's like, go buy rental property and create cash flow. And Dave the Dipstick saying, no, pay everything off in cash. And I'm like, okay, I'm trying to do both. How come that's not working? Because I was using all this money to pay off my debt and pay cash for everything, not understanding there's good debt and there's bad debt.
Mm-hmm.
And some things create cash flow. You just got to be smart about how you buy. Most people are so scared about how to buy something that they're going to lose it that they just don't do anything.
Mm-hmm.
Hey guys, thanks for listening. You know the routine. Mary Jo at Without the Bank. If you have questions, grab the book, schedule your appointment, all the things. Okay, have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.